In this video, I am going to be answering some questions that you guys had about business credits and getting access to capital as a startup and as an existing business. And so let's jump with the first question. How long does it typically take to establish a solid business credit score? A bit of a loaded question, so I'm going to kind of answer it in two pieces. Depends which score you're looking to build out. If you're looking to build out a paydex score with Dun and Bradstreet, that's pretty quick. That takes maybe 60 to 90 days. It just takes about 2 cycles of you paying your net 30 accounts. So those are your vendor trade lines, net 30s, net 45s, net 60s, net 15s, whatever those are. Typically 2 to 3 cycles of that, and you'll end up with a 70 to 80 paydex score. Now, the caveat to that is that if you're looking to get access to real cash value credit, which is what most of you guys that are watching this channel typically want, because that's what you're going to use for things like payroll, real estate investments. You're going to use it to fund projects. Then you want what's real cash value. And with that type of score, what you're really looking at is not just a score, you're looking at a rating. Now, a rating, and I think that there's a question in here that we're going to be diving into that, but a rating takes a look at everything in your business, not just how well you've been paying your debt on time, but the business that you're involved in, the industry, how long you've been involved in the industry, how much capital or how much revenue is coming into your business, how many employees are in that business, where geographically is that business located. And so on a risk rating, you want to have that between a 1 to a 2. It goes from 1 to 5. You want to have that between a 1 to a 2. Going back to the score though, when it comes to Experian and Equifax, those will be the main scores that I would rather focus on if I'm going to invest my time, because again, getting the paycheck score by nature is going to be super simple. You just make those payments on time. Your Experian and your Equifax score, monitor it and ensure that the accounts that you have are indeed reporting over to Experian business and Equifax business, because those right there tend to lag a little bit more, and you'll be making payments on time for like 6 months and you have like no credit built out for it. Next question is, should I pay or should I apply for multiple business credit cards, or would that hurt my score? It's actually a really good question. And so, can it hurt your score? Not necessarily, but can it hurt, like, in all things being equal, if we're just talking about hard inquiries, 2 3 points, sure, that'll drop your score some. But can it hurt your business credit score? Not necessarily. But does it hurt? I'll reframe the question. Does it hurt your ability to get access to additional capital if you're applying for too many things too quickly? Absolutely. I probably link a video to this somewhere on here so you guys can catch it on some pitfalls that I've seen whenever somebody is trying to credit stack, just because it's difficult to scale, especially as you're just applying for too many things too fast. And so what you want to do is you want to have a timeline of when you need the capital by. Now, that's not to say that you're going to get it in that time frame, but it allows you, this is how I think about it with my clients, it allows you to have an open target that you can lock in on. And so that way you can start working the numbers backwards. So if the number is, let's say, 200, we may not necessarily go after the full 200 in the next 60 to 90 days, because it'll overload the system and maybe the business isn't established enough just yet to withstand that, which is where having a proper business funding setup comes into play, which is what we do with our clients all the time. And so we may space that out, and we may say, hey, the 200 is going to come, but we're not going to overload the system and try to jam this thing out in 30 days. We may just spread it out between 2 or 3 different sequences and get access to this capital in the next 90 to 120 or 120 to 180 days, as an example. Because the whole goal isn't just to get capital now, but it's to put us in a position, which is what I would tell my clients and what I tell you, is to put us in a position that allows us to get access to capital at scale, not just in this current moment. If you are a small business owner who's looking to get access to business capital, and more importantly, put a system into place that's going to allow you to scale your capital in a sustainable and predictable way, I would love to connect with you. This is what we do. We build business funding setups for our clients, and we embed them into their businesses so that they can do just that. If that at all sounds interesting to you, we'll love to connect with you. Book a call with our team. You can click the link down below, insightInnerCircle.com. Let's continue on with the video. Question number 3, what's the difference between a business credit report and a personal credit report? Well, it's kind of in the name. One's on the business side, one's on the personal side, right? But if we wanted to go deeper into that, your personal credit report has everything to do with your ability to pay debt back on time. That's really all that is. It's financial hygiene. 65% of the personal FICO score for Experian, Business, and Equifax is determined by your payment history and the age of all of the accounts, right? Of how long we've been making these payments for. The older the accounts, the lower the utilization, and the more I'd say frequency of payments we're making that are on time, then that's like you should have no issues being in that 750, 760 and above range, right? It has nothing to do with your gender. It has nothing to do with what you do for a living. It has nothing to do with where you live in the country. It only has to do with those key metrics, that data that's being looked at and generated. Now, the business credit score side does play a factor into the type of industry that you're involved in. Even though that leans a little bit more into the risk rating side, it does play a small role on the business credit score side. They are still looking at, and when I say that, I mean the business credit bureaus, which in this case would be Experian Business, Equifax Business, similar to what we have on the personal side, and Dun & Bradstreet. They are looking at your payment history, but there's something known as days beyond terms, which is DBT. So if let's say you have if it's a net 30 and you make that payment on day 31, then that means it's 1 day beyond terms. You want to make that 10 to 15 days prior to that cycle closing out. But also, in addition to that, is ensuring that your business is properly structured inside of the right industry that makes sense and that's congruent to your business. Because if it's not, then what ends up happening is that even though you are making payments on time, and even though you do keep a lower utilization, and even though you do have access to a wide variety of accounts, both on the vendor and the financial side, if your business isn't properly structured and categorized, it actually lowers the score and creates what's called a higher risk rating, which is what you want to stay away from altogether. That's known as restructuring the business. Question number 4 is, are there specific loans or lines of credit that are easier to qualify for with a new or low business credit score? It's kind of like 2 questions in there. So I'll address first, like if you're a newer business, it's going to be pretty difficult to get access to what's known as business lines of credit. Those are revolving lines that you can get, not just loans or installments, right? Those are revolving lines that you can get that you can pull cash from, similar to like if you were getting hard money, but this comes directly from a bank. So you're able to pull cash from that. You'll make, let's say, your real estate investment, and then let's say you get the profit on that, you repay the account, and then the account replenishes, and you can pull from that cash out again the following month or in the following couple of months, right? Those are a little bit tougher to get, especially in this economy right now. Bare minimum what banks are looking for right now is right around a 6-month range. And again, this varies all the time. If you would have asked me a year ago, I would have said, hey, if the LLC is 3 years of age or older, we're good to go as long as everything else is dialed in from the way the business is positioned, the way it's structured, the bank that we are maybe working with or partnering with, and then like where we're located at in the country. But that's changing. We're starting to see, honestly, 6 months is like bare minimum. That's just the talk. That's not a guarantee. Really, it's closer to 1 year plus in age. And so right now, really what you're left with, if we're being honest, are business credit cards. Now, you can still use that, but at scale, you do want to have a wide variety of products that you can get access to, because that's how you unlock essentially scale when you're looking to get access to higher lines of capital, not just the business credit card or the personal, or the business credit card stacking stuff that you tend to see out there, right? That's fine at a baseline, but we eventually grow from that. Now, if we're talking about a business with a low score, then you want to take a look at does the business just have a low credit score, or does the business owner have a low credit score as well? Because those are also, like, I'm repositioning the question for a reason, because there's like a gap in knowledge here that we have to address. If we're talking about the business owner or the business owners have low credit scores, we have to address that, because that's usually the first lever that banks are going to look at to determine how much capital you're going to get access to as a business owner, even if your business is generating $4 or $5 million a year. Like, I see this all the time. People say, how can I bypass that? Like, in order for you to get access to non-PG products, number one, it's invitation only. And then number two, it's essentially interview rounds. that you have to go through, and your business has to be generating, and again, financial ready documentation, not just, hey, on paper, this is what I'm doing. No, no. Financial ready documentation over $4 million over a 24-month consecutive period. And that's just to talk, right? So, like, I would be prepared in my mind, hey, I'm going to personally guarantee this, that, and I'm okay with that, which means my personal credit as the owner that's co-signing on behalf of my business needs to be in line. If you have a lower business credit score, I tell you what I tell my clients, make sure that we're bumping that up. Obviously, we're working closely with them. If you're watching the channel, then you've seen content around this around here, which is fantastic. I would implore you to check that out. Start working that business credit rating and business credit score up as well, because it helps offset some of the other indicators or some of the other data that banks are looking at that you may not have as much strength in. Like, you may not have strong financials just yet. You may not have a lot of time in business just yet. You may not have that many employees. You may be in a higher risk industry. You can offset a lot of this stuff with having a strong personal and business credit score. Question number 5 is, what should I do if I spot errors on my business credit report? Love this question, because it's one that I can tell you've been doing your research. And so what you want to do is you want to start cleaning those items up. And so this is one of the first dials that we look at with our clients is we run them through a full audit. And so I'm going to run you through the checklist that I'll give them just off the top of my head. Is the name of the business, does it match up everywhere on Experian, Equifax, and Dun & Bradstreet? But we want to take it a step further. Does it match up with the financial institutions if we already have partnerships with them? Especially if you are an existing business, it has to make sense. So we have to go a level deeper. So we have at the business credit bureau level, then we go at the financial level, and then we go at the state level. We make sure that all of that ties in. And so it can't be Irv's Coffee Shop LLC with Dun & Bradstreet, and then it's Irv's Coffee Shop Limited Liability Company with the state. At that point, those are actually two different names. Even though LLC is short for Limited Liability Company, we have to make those proper changes when needed, and we have to make sure that they reflect everywhere. Next up, you have your industry classification codes, lining it up everywhere. You'll have where you're located at as the business owner, if you're on paper, or the manager, where your business is located at, and then where you conduct business, like where the business actually operates. That all needs to be dialed in. And then lastly, if you've been in, this is more so if you've been in business for some time, and if you haven't been, then kind of hold on to this, because it'll pay dividends for you later on. Make sure that you're keeping up to date the number of employees that you have right now. One of the biggest mistakes that I saw that kept a client from getting access to capital before they came to work with us was they had, I think it was 3 employees on their business credit report, but they had already scaled. They were closer to about 12. And they also had scaled their revenue. But the business credit bureaus still had them with their numbers of inception of when they first opened up. And so that actually ends up hurting you in the long term. And so making sure that you're staying up to date with that, I recommend checking your business credit reports once a month. If you're in the cleaning process of it, once a week. You want to have strong hygiene. From there, you can be a bit more relaxed once you've gotten access to capital and you're dialing a few other things in. But bare minimum, once a month, if you're dialing these things in once a week. Question number 6, how can I start building business credit if my business is fairly new and I don't have credit history? Well, if you don't have credit history, good news for you is it's actually easier for you to build access or to build business credit if you don't have access to credit just yet, or if you're just starting from scratch. But you want to make sure that you have a nice mix of lines and a nice mix of credit accounts that are in there. I'll give them to you right now. You want to have at least, and it'll be dependent off business. So I wish I had more context on what type of business you have, but you want to have at least 4 to 5 vendor accounts. So those are the net 30s, net 45s, net 60s, Granger, Uline, Quill, gas cards, all that stuff, right? But then you also want to have a nice mix of real cash value accounts. So we can start out with business credit cards. So those are your financial accounts. So we have vendor accounts and then we have financial accounts. The reason why this merge is going to be important is because we're building out all scores and all ratings at the same time as these are reporting. We're building out, our Paydex scores, the ones that we all know, but then we're also building out our financial stability and our risk rating scores. So that way we have a 1 to a 2 on the risk rating side, which is where you want to be. Scores go from 1 to 5. 5 being, high possibility of default, which is bad. 1 to 2 being low risk, and then on the paydex score or on the Experian and Teller score, it goes 1 to 100. That's more like school, where it's anything above a 70 is good. So once you get to a 70, you're not going to get much. It honestly becomes diminishing returns. 80, 85, 90, you're not going to get much. Once you hit 70, 75, like you're good. Move on to the next part of your business credit building journey, which is what I tell my clients all the time, is we really want to focus more on how much credibility we're building on the financial account side, because we have business credit cards, we have business loans, SBA loans, we have business lines of credit, and then we have equipment financing. And then we're making sure that there's no UCC filings or anything in the cap stack that's holding us back from scaling once we hit a certain threshold. And the last question was, can opening too many business credit lines too quickly hurt my credit score, my chances of funding? We kind of addressed it earlier, but I'll reemphasize on this again. If you are applying too quickly for too many products, it sends a red flag to the banks, and it actually sends an alert. And when I say banks, I'm using interchangeably financial institutions. So that's credit unions, big banks, regional banks, local banks, all in one. And so your file looks like it's a file of desperation, if I'm being honest with you. And so if I'm looking at it like on a bell curve, what ends up happening is you'll get like an approval here, and then you'll get like a pending approval, or like a pending, and also a denial, and then it just all goes downhill from there. And so you'll get kind of lucky, and you'll have like a false, what we call feedback loop. It's like, oh, I did this action and I got approved. But then what we fail to realize is that we did it in the wrong order, or we did it too quickly. And so what we like to do is we like to space out the funding that we're getting. And so we may not go for the full 150 in 30 days if it's going to break the business, if it's going to break like the capacity to bear that capital, because there's no foundation in it just yet. So we'll go in, we'll get, let's say, an initial 65, 70. We'll make sure the infrastructure is built out, and then we'll build the capital on that and then continue to scale it from there. This is where patience and knowing what you're doing as a business owner comes into play. But if you've been watching our content, then you know that we talk about this quite a bit. So you're able to go back, start going through some of our other content where we break down how to space out your credit applications, what to put on credit applications, what not to put on credit applications, how to classify your business, what classifications to stay away from, because it's going to be seen as a high risk or as a restricted industry. So that's essentially the 7 questions that we have for today's Q&A. If you found value in this content, consider sharing it with a friend that is a business owner that you think is going to find value in this as well. If you are a small business owner and you are looking to get access to business capital, not just with where you are now, but you're looking to put a system into place that's going to allow you to scale it as you continue to grow your business and your operations, we'd love to connect with you. You can book a call with us to see where you're at and where you're looking to go and see if we can help. That's insightsinnercircle.com. You can book a call with us down below. Other than that, I will see you guys in the next video. Bye.